Hello everyone, welcome to another video. All right, so I hope you guys really found the primary sequence video insightful. You can see it happens every single day, every single fractal of time, right? And you will also see that we're going to be having a lot more videos on how you can apply this on a sessional basis as well. Okay, so in today's video, we are going to be covering the Dublin theory secondary sequence. Okay, now, it is as simple as the primary sequence, but it's not as simple as the primary sequence. Okay, you will learn why. All right, it's a bit of a difficult one. So let's take a look. The secondary sequence, what we are dealing with, right, is we are dealing with the first number one being engineer liquidity, number three being the higher law of the fractal, number five to seven being the retracement, eight being the buy or sell model. Okay, and up until that point, we are going to get the retracement or the reversal, right? So, for example, we have the high and low, we have engineer liquidity, price forms a low, and now after this, what's going to happen is it's going to move, right? And price is then going to retrace, and then it's going to have the buy model, like so. Okay, it is as simple as that in terms of understanding the overall situation. Okay, it is as simple as that in terms of understanding the overall situation. Okay, but it's a bit difficult to understand, is this engineered liquidity, is this not engineered liquidity? Okay, so the most important thing that you can do is to actually start trading here. Okay, you let this be your data collection point, and you let this be your execution window. Okay, that way you can make money easily. If you try to take trades here, sometimes stop loss, sometimes it will go well. You're leaving it to chance. If you're not using my algorithms, you are definitely leaving it to chance, right? But if you use this via a rule-based perspective, like so, by entering inside of this level, or rather this level of time, this region of time, it gets simpler, extremely simple. Okay. Now, we have the same FIB settings, and let's take a look at the live charts. All right. So this is today's price action. Gold. So we had a buy over here using intra-session fractals, which I took major partials and rested break even. And now this is based on the overall daily sequence, the daily primary sequence. Okay, so that's that. Now, when we are talking about the secondary sequence, we need to see exactly what a secondary sequence looks like, right? So you can see everywhere over here you have a primary sequence. Here also you have a primary sequence. Everywhere it's primary, primary. Here's a secondary, right? So it's very easy to show like this. Meaning, what do I mean by that? It's very easy for me to go into the backtesting mode and then show it to you like this. Super easy, right? But then what matters is being able to do it live, right? Because that's the that's the hard part. Now, if you just take a look at this, okay, remember what I just said. I said you let these two intervals go. So you let this play out, okay? And then you know that, okay, from here I can start to look for entries, right? Now, if you are a student of mine, a one-on-one student, you will know that price is supposed to go down the moment it made this candle. It should have gone down, okay? But it didn't. It continued going higher. So when that has happened, rather, I can then start looking for buys. Okay. So what's this? This is a breaker. How is it a breaker, Sean? Because it goes down. Doesn't mitigate the gap, it mitigates the up close candle, goes down, and then it violates it. So that would be the breaker. So this is where you have your where the buy program begins. Okay. And if this is where your buy program begins, then we understood that okay, the engineered liquidity, that's engineered liquidity. Here's the low formation. And here, retracement, and then the buy program should begin somewhere here, right? The buy program should begin somewhere over there. So let me take this out for a second. Hold on. Yeah. Buy program should begin somewhere over here. So if that is the case, right, any retracement should happen after we take out the Asian high. So let's say, okay, I enter early. I am anticipating that this is going to be a buy program. So let's say I keep my TP here, okay, and let's see what happens. All right. So this is supposed to be a retracement. There you go. See, now we got that, right? See that? Got the retracement. Price is retracing. Yes, even if this hits stop loss, okay, which it doesn't. Now it retraced, telling me that, okay, this is the, now this is interval number 5, 6, 7, 8, right? That means between here and here, once the retracement is done, we should begin the buy program. Okay, so there goes up. Okay, fine. Hits my break even. No problem. No problem. Right. This is giving us even more fuel. What's the fuel? Fuel meaning it's taking our liquidity. It's doing the retracement. Why? If you remember from the previous video, the retracement is the act of inducing. Then begin the buy program. Okay, begin the buy program. There, and then the day ends. So, Sean, this did not do exactly what you said. Why not? Think about it. Okay, think about it. Engineer liquidity. Yeah, low formation, retracement. Okay, retracement happened. It went one more time. That's fine. And then that initiated the buy program. The buy program can be initiated at any point over here. That is a problem with sequence 2. Okay, once you see that inducement, once you identify the inducement, then the buy program can begin from there itself. Okay, now to make it more clear, what we'll do is we will just delete this, right? And let's see if there's any other place, any other day in which we had a secondary sequence, right? What about this day? This looks like it, right? Yeah, okay. High engineer liquidity, low formation, and then price starts to what? So we are thinking to ourselves, okay, here, price should retrace. Okay, Sean, sure? Is it retracement? Yes. If it is the high or low of the fifth, this is the high or low of the fractal. This is the low of the fractal, right? Then between 3 and 5, you're supposed to get a what? You are supposed to get a retracement. Okay. So what is my retracement? If this is the low, I need to get a retracement down, right? I need to get a retracement down. So the act of retracement is an act of inducement. The price comes here, that induces the lows, starts to go up. So when the inducement is done, I can say, okay, I want to go for a buy program because if this is a low, price should go up, right? And if it's a high, price should go down. So if it's a low and price goes up, it needs to induce lows to go higher. Example. Okay, and where's my TP? Here. Let's keep it at the easy TP point. All right. And it was just meandering the entire time. Meander, hit. Okay. Now, if we go to another day, okay, if we go to another day, what about this day here? Now, I'm showing you perfect examples because it is through the perfect examples only that you will learn. This is sequence 1, which turned to another seek and destroy. All of these are sequence 1s, sequence 1, sequence 1, sequence 1, sequence, sequence 1, sequence 1. This also sequence 1. See, there's a lot of sequence 1s, right? Here is a sequence 2. Okay. Now, if you look at this sequence 2, let's see. This sequence 2, we need to draw it properly. Okay. Why is there no 6 o'clock? 7 o'clock only. All right. I think because of DST. All right. That's fine. Okay. Now here, what's going on? This is sequence 2. Why? We have engineered liquidity there. Take out the engineered liquidity. This is a high formation. Okay. After that, we're looking for retracement. What is retracement? Act of inducement. Okay. After that, we need to get a sell program. So, sell program. Da, 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 da. And then price hit objectives. And then it went for a buy program, which is okay. Now, the entire purpose of sequence number 2 is that once it is done with the serve program, it will then retrace or it will reverse, which will lead to a buy program. That's what you're seeing over here. But it doesn't change the fact that the daily range expansion was to the downside. Where it mattered the most, you got the easiest expansion in between these two ranges, time ranges. Okay, that's where it matters the most. That's what you need to understand. It is where it matters the most only. Okay, and you will see a lot of the time it is all sequence one. And when it is sequence one, as per the previous video, it's actually really, really easy. You see, you just let go of these intervals. Okay, we have a low formation, then we're going to retrace with the inducement, done. Begin the buy program, boom. And over here, we will see the terminus of the buy program. And over here, we will see price just retracing just to continue higher or reversing, whichever. In this case, it's retracing there. Okay. Now over here, what we have is we have a sequence number. What is this? Sequence number 2. Yes, sequence 2. All right, what we got? We have engineered liquidity, low formation, and then we're supposed to retrace. Okay, now the retracement is if this is a low, then as we're going up, we need to retrace into lows, right? We need to retrace into lows. So here we did not retrace into lows, right? But you as a trader, as we are going in time, as we are moving in time, you know that once the retracement phase is done, it's going to be what a buy program, right? So then you just adapt. You know that okay, if this is a retracement, this is a retracement. On the 5-minute chart, it is not. Maybe it could be on the 1-minute chart, right? We're going to get a buy program from here, and if you get a buy program from here, then this interval is going to expand to form the opposite end of the buy program, which is the high of the day. Okay, so I know it is a bit confusing sequence 2, but you gotta study a bit, right? The sequence 2 needs to be studied a bit, but sequence 1 is extremely, extremely, extremely easy. Let's check this here. Over here. Okay, so this is sequence 2, engineered liquidity, high formation, price goes down, supposed to retrace. So it goes down, retraces going into highs. Good. Now you know that my sell program can begin. And if my sell program can begin, then until this large interval of time, right? That is where price is going to form the opposite end of the range, after which it will retrace. See that? That, that is sequence 2, guys. Okay? That is sequence 2. So that's all. So if you guys understood, I would definitely love to hear what you have to say in the comment section below. Something nice, something that if this helped you out, if this helped deepen your understanding. Love to see all these comments, right? And if you are still interested in getting the algorithms, which I would recommend getting because we're having a Black Friday sale. It ends in 4 days on the first, I think 4 or 5 days. It's ending on the 1st of December, 2024. You can get the algorithms at 60% off of the original price from what is going to be in January 2025. All right. And in the next few videos, we are going to cover in depth how each session works with the primary and secondary sequence. And we'll also be looking at the Uncle Sean the spot. Cringe, right? But I got to give some name to it, right? Some funny name, maybe. All right. So, with that said, I hope you found this insightful. I hope you put in the work. And I hope you get the Black Friday deal because, like I'm always saying in these videos, I need users so that we can turn this into something massive. All right. So that's it. Good luck in good trading. Have a good one. Bye bye. And also, don't forget to like, comment, and subscribe. Bye bye.